Hey, it's Clay at claytrader.com. This is my top 10 stocks as we head into Tuesday, May 10th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, then this will be a video for you. Before I get to the watch list, I first want to personally invite you to get signed up for this free live online class that I'm offering later on in the week. So if you're enjoying what you see here and you want to learn more about this tool, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So again, if you like what you see here, then certainly get signed up for the free class. A couple of quick clarification points. First off, the market is still open for a little while, so that number right there you see will still be moving around, and then the candlesticks will also be moving around a little bit too. But I like to do these videos when the market's still open for a little bit because sometimes we can capture some really interesting late day type price movement. But the market is close enough to being done for the day where everything I talk about will still be relevant on Tuesday. And then next, I'll be using the 30-minute time frame. So if you're a beginner, what that means is that each one of these candlesticks here represents 30 minutes worth of time. So stock number one here, PLTR, very popular stock out there, almost a cult stock in some senses, but they had earnings and got absolutely destroyed. But what's interesting about this, I'm going to go ahead and get rid of that is, and this will mean a bit more to those that have traded for a while, but if you have, I'm sure you've seen stocks gap down, and then after the gap down, they just do something like this, bleed and bleed and bleed the rest of the day. That was not the case here. PLTR, no doubt about it, absolutely got smashed down on the big gap here, but let me change that around. However, after the gap, you can see just essentially started to go sideways and level out there at $7.35. Now, let me be very clear, and I wish I could say trading was this easy. Just because there was a huge gap down and just because the price went sideways instead of drifting downwards does not mean that for sure guaranteed this is the bottom and then an upwards move is going to happen. My point here is it at least a plausible? Is it at least a valid thought process to have to suggest that, you know what, maybe this is some sort of bottom forming and there might be a bounce to come? Yeah, that's absolutely plausible. Again, not guaranteed. That's why risk management matters, but it's by no means some sort of random thought process to have. So on that note, as I already mentioned, 735 going to be an important level for no other reason other than the fact of that's seemingly where the price is bottomed out here. But of course, if the price just crashes down through it on Tuesday, well then this whole premise of maybe this is some sort of bottom goes out the window. But that is the entire idea behind a watch list, right? You find unique situations, you find interesting situations, and then watch them. And if they do ultimately behave in a way that fits your personal strategy, then you could potentially take a trade on it. And in my mind, this is a very interesting situation because, again, it's a very popular stock. It's gap down. However, after the gap down, the price just started to go sideways. So let's see if this is indeed some sort of bottom forming or not. Next one here, XELA, which is a odd looking chart because the markets, got destroyed today once again. However, this thing is actually going up. So that in and of itself is actually a very interesting situation from just while this one did the exact opposite of what the markets did. And it's also a penny stock, which does make some sense. These are sometimes detached from more so the broad market. But if this is the price range that you like, well, then there's no doubt about it. On top of all the nice price movement, there is good solid volume here too. So once again, going back to the idea of what's a watch list, find unique situations and charts that are actually going up when the overall markets are getting destroyed. That in and of itself is a unique situation and certainly worth watching. So if you're somebody that likes to play more so pullbacks, then an interesting level on any sort of pullback could be right down there around that 34-cent mark. As far as next potential resistances are concerned, let's squeeze down the chart here, and you can see that the next overarching level of resistance potentially going to be right up there around that 40-cent mark, which comes back here from, let's see, when was that? Back there on April 19th. You can see a couple times there presented some problems. But all in all, no doubt about it, huge move, huge volume. When the markets were down, this thing was up. So let's see if this momentum carries into Tuesday. Next one, AMC, definitely, a cult stock. So a lot of people still very much so care about this one. And overall, a very rough week start to the week here. But to be fair, a lot of stocks had a rough start to the week. So it's not like this thing is on an island all alone. But nonetheless, it is what it is. So first update that needs to be done comes about based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So 1350 will be that first key hurdle. So if there is any sort of attempted bounces in the upwards direction, that first key level again will be 1350. And, essentially a question of, can the price, first off, of course, get up to it? But if it does, is it going to have enough strength to ultimately stay up or push above it and stay above it? So that'll be the big question mark. And even if it does, you want to be very skeptical about getting too, overly excited because not that far away is then that very stubborn and very annoying purple line there, the 50-period moving average. So those would be the main levels there. As far as next potential areas of support are concerned, next level to watch, and you can see going way back into the chart's history, right? Wow. Oh, I take that back. It's actually already below these lows. Okay. Wow. I didn't realize it was actually that bad today. Okay. Let's go to the daily time frame. I did not realize that it's actually way, way down at lows that have not been seen, I think, in over a year now. So yes, next key level of support now going to be right down there at $11.75, which is coming from, when was that? Back in May of 2021. So yeah, almost a year ago since the price has been down around these areas, but $11.75 will be that next key area of support. But yeah, needless to say, definitely even more so than I realized, a rough start to the week on this one. Next one, RIVN, very popular stock that got crushed today with the news of Ford, dumping a bunch of shares. And in this one, again, relatively popular. I'm not going to go as far as saying it's as popular as PLTR or AMC, but let me be very clear. As I draw this trend line, I'm not trying to impress you. I'm not trying to imply that that's some sort of great discovery. I assure you a bunch of people have drawn that trend line. And I say all that because when a lot of people are watching the same areas, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. And that's what a lot of people are going to be watching. So once again, as I've mentioned, no such thing as a guarantee, but is it plausible? Is it valid to think that if the price can get up through there and push up through that trend line, that could create some sort of upwards movement that would be worthwhile from a trading standpoint? In my mind, yes, not guaranteed to happen, but a more than plausible thought process. Because again, this thing is popular enough where people are almost looking for any excuse at all to buy it. But you don't want to do be too premature to buying, but that's where that trend line can help in that regard. So keep a close eye on that if there is any sort of attempted bounce in the upwards direction. Next one, AMD, which is now starting to approach a very interesting level here on the chart. And once more, does not mean that the price is going to bounce or anything like that from that area. But is it, valid? Is it plausible to think that it could bounce? Absolutely. And that area is down here right around $84.75. You can see the past several times the price, generally speaking, has been down around that area, both there and right there. I realize the price didn't hit it exactly, but again, generally speaking, the price has gotten some nice bounces from that area. But I really want to reiterate, does that mean that if the price goes down there, it'll for sure guaranteed bounce again? No. But is it a random spot? Is it just kind of a total dart throw? Or is it there is some rationale that goes behind it? Certainly some rationale. It has bounced twice before. But will it bounce a third time? Of course, that's the unique, interesting situation to watch, hence a watch list. So if you like AMD, if you're someone that likes to try to play bounces, well, then this 84.75 mark is certainly a very interesting location to keep an eye on. Next one, SOPA, which is a very ugly looking chart right now. However, there can be opportunity in ugly, but I need to, throw this out there that if you're not good at honoring stop losses, if you don't even know what a stop loss is, well, then you shouldn't even be trading, but that's a whole nother topic. But this is certainly for people that are going to display risk management skills because yes, there's no doubt about it. This is very nasty, but in many situations, not many, I should take that back. It's not illogical to think that if this pulls back a bit more, gets a little more ugly, and specifically in my mind, right here at this former breakout point of $2.20, I could see there being some sort of bounce from that area. Again, not guaranteed, but that's not any sort of, random area on the chart, but that's also why those stop losses matter because to be fair, it's a two-sided coin. While it certainly could make a very nice bounce in the upwards direction, maybe it just keeps bleeding, and that's where you don't want to turn into some sort of bag holder where you're sitting there holding and hoping. If that doesn't work out, then you got to be disciplined to cut that loss. But again, two-sided coin. So while it could just keep bleeding, who knows? Maybe it decides to bounce back upwards. But if you're somebody that likes to play these charts that are looking pretty ugly and you want to time that up at an area where maybe everybody's waving the white flag when people should actually be getting in, like I said, then, $2.20 becomes a very interesting location. Next one, UVXY, which is going back to I'm not trying to impress anybody with this line here. So this is not, some great discovery. It's not some sort of special talent. I assure you, all sorts of people are watching this $20 mark on UVXY. Now, UVXY is an ETF which allows you to make money if the overall markets go down. So if you think that the markets are going to keep going down, then this is a way that you could still continue to make money in the market. But the very interesting dynamic here is going to be that $20 mark. You can see $20, again, generally speaking, rejected the price. And then last 30 minutes as I speak, the price is once again getting right up around $20. So you're going to have all sorts of people watching and wondering what happens at $20. So could that very well create a self-fulfilling prophecy, extend move to the upside? Absolutely. But as always, that's not for sure going to happen. But nobody could sit there and accuse you of saying, why would you be caring about $20? $20 is a totally random location on the chart. That would just be a false accusation. $20 is a very well documented area on the chart, so it makes sense to watch it. So if you are somebody that's still feeling pretty bearish on the markets and you're wanting a way to still be able to make money if the markets keep going down, then UVXY is a choice that you could be using to watch. Next one, BWV, and once again, like XELA, probably looks a little goofy as a chart because, hey, this thing's actually going up when the overall markets were going down. And this is not an ETF that's going to go up if markets go down like the one we just looked at with UVXY. But once again, an area here that I'm confident a lot of people around the world are going to be watching is this area right here around, let's call it $6.30 because of that trend line right there. So a lot of people have drawn that trend line, so it does bring about the whole idea of self-fulfilling prophecies. So keep an eye on that as that area of resistance. As far as supports are concerned, if you like to potentially play pullbacks, then an interesting, pullback area in my mind at least is right down there around that $5 mark. But yeah, you got to think that there's a lot of people watching wondering if the price can get up to that area and push up through it. That could create some additional buying pressure. So let's see what happens. Next one's CYN, and this one's on here for one reason and one reason alone. And it'll mean maybe a bit more to those that have watched past videos that I've done. But if you have, hopefully remember me putting that resistance trend line into play right there and check it out. Didn't hit it exactly today, but certainly got well within that general range. So there's just going to be that many more people watching that trend line, especially those breakout players, and watching, wondering, can the price actually push up through there? So going back to the idea of self-fulfilling prophecy, can it get up there and push up through it? If it does, is it rational, plausible to think that that could create that much more buying pressure with the breakout? It absolutely is. So like I said, if you like to try to play trend line breakouts, if you like, playing stocks down below $10, that's a very interesting level to watch. As far as pullbacks are concerned, overall, you got to like the general kind of upward slope to things. You can see that a couple different ways. You could draw yourself a trend line like that, or you could just use the overarching moving average right there, that pink line, which on my chart denotes the very famous 200-period moving average. So point here being, in fact, just from a quick pattern perspective, have a nice symmetrical triangle right there. And given that it's occurring within a bullish environment in terms of the overall uptrend, again, that doesn't mean that it's for sure going to go up, but is it plausible to think that it could get a breakout to the upside? That is a plausible thought. So like I said, if you like to play these sorts of patterns in this price range, definitely get it on the watch list. Next one, TSLA, Tesla, and what a train wreck it was today on Tesla, but a lot of these tech stocks suffered the same fate, and definitely updates need to be done. So first thing I'm going to do is actually adjust this area down here because it even broke through that level of support right there at $822, which is now going to be considered a level of resistance. Again, just based on the foundation rule, when levels of support are broken and closed below, tend to act as resistance. So if Tesla does, and now that may seem far away, but it's Tesla, it can move quick. So I don't think 822 is actually that far away. So if that thing does bounce back up there, a lot of people are going to be wondering, the longs, hey, is this some sort of breakout opportunity? But the shorts are also going to be wondering, hey, is this just a back test before continuation back to the downside? Both of those are plausible thought processes, but that also illustrates why risk management is so important, because somebody's going to be right, somebody's going to be wrong. So you want to make sure that if you're somebody that is wrong, hey, that's okay. It happens to everybody, but you're controlling that risk. As far as next potential areas of support are concerned, if this thing continues to bleed further and further down, next level to what? Might be behind my ugly mug. There we go. Next level to watch. Keep an eye on if this bleeding continues. Going to be right there at 780. And then after 780, next key level down there at, which I would consider a very, very big one, right there at, let's call it the $750, $755 level. But yeah, like a lot of these tech stocks, absolutely destroyed today, but we'll see what Tuesday has to offer. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about this tool and how it can be used to help build consistency as a trader, then certainly get signed up for the free class. Like I said, it'll be later this week, Thursday, May 12th. At 7 p.m. Eastern time, so I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make these videos and put in the time and effort required to create this content, then help me out with some basic feedback. Hit that like button, leave a simple comment. Say hi, tell me what you traded today. Say thanks, give me a smiley face emoji. But hitting the like button and leaving a simple comment go a long way in communicating to me that you enjoy these videos. Like I said, as long as I know that you are enjoying, then I will continue to put in the time and effort required to create this sort of content. So again, if you like what you saw here and you want to learn more, certainly get signed up for that free class. Hopefully I'll see you there. Everybody take care. Have a good one.